Welcome to Weekly Market Research from Fullerton Markets. Let's dive into the latest market trends and insights. S&P 500. Wall Street gears up for a busy week as Q3 earnings season heats up and key inflation data arrives. Financials have led early gains, with S&P 500 profits expected to rise 8.4%, potentially topping 13% once reports are in. Investors are watching earnings calls for clues on AI's labor impact amid a government data blackout. Despite market swings, all major indexes ended the week higher. Attention now turns to Friday's CPI report, expected to show headline inflation inching up to 3.1%. Markets still see a likely Fed rate cut on OCT, 28 to 29, unless inflation spikes. Analysts remain optimistic, with forecasts of the S&P 500 hitting 7,200 by year-end. Meanwhile, US and China trade tensions linger ahead of APEC talks in late October. SPX USD on half-day chart. Even with the US government shutdown, stocks and indices remain resilient. Currently, prices sit in the middle of the range. We suggest buying near 6,550 and taking profit around 6,800, close to the resistance level. Gold. Gold fell over 2% on Friday after hitting a record above 4,300 OZ, pressured by a stronger dollar and President Trump's remarks that a full-scale tariff on China would be unsustainable. Gold dropped to 4,240, though it remains up nearly 5% for the week. Trump's confirmation of a meeting with China's leader eased trade tensions, cooling demand for safe haven assets. Despite the pullback, gold has surged 64% this year amid geopolitical risks, central bank buying, and expectations of US rate cuts. Analysts see more upside ahead, with forecasts pointing to $4,180 in 2026, and even $5,000, as physical demand in Asia stays strong.
XAU-USD on H1 chart.
After reaching 4,380 Oz, gold made a sharp drop to 4,080 Oz, a $200, or roughly 5% decline near market close, signaling heavy profit-taking. However, the chart still suggests an overall uptrend continuing into the final quarter of 2025. GBP USD UK Finance Minister Rachel Reeves reaffirmed her commitment to strict fiscal rules, but warned that tough choices lie ahead as the country faces geopolitical and economic headwinds. Ahead of her November 26 autumn budget, Reeves said she will be honest about challenges including war, global tensions, and high borrowing costs. Reeves aims to keep spending funded by taxes and reduce public debt by 2029 to 30, but hinted she may need to reconsider her pledge not to raise taxes on workers. Breaking fiscal rules or cutting spending further could anger voters or rattle markets, with UK bond yields already above 5%, the highest in the G7. She pledged to maintain fiscal discipline to restore growth and lower borrowing costs, even as internal party resistance complicates welfare and tax reform plans. GBP USD on daily chart. Since July 1st, this pair has been forming lower high and higher low, indicating a long-term consolidation phase. We suggest to buying with a target near 1.3700, the projected resistance level, targeting 250 pips of potential upside. Stay tuned as we delve deeper into these market shifts and their potential future impacts. We are Fullerton Markets.